Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Technical Analysis. Today is Thursday, July 3rd, 2014, and the week comes to a close right before the 4th of July, long holiday weekend, and as suspected, all we did all week was basically float higher. Even today, I thought we would have a slightly higher, maybe even a flat day after the jobs number, but lo and behold, the jobs number came in much better than expectations. Whoever believes that number, it doesn't really matter. We just look at the charts, and they sent the market up. The volume was about the same as yesterday. What a great excuse to finish the week on a high note. Everybody goes out feeling good. You'll hear on the 6 o'clock news that the Dow Jones Industrial Average closed above 17,000. It's a record high, this, that, and the other thing. And the reality is we don't care about the Dow Jones Industrial Average because it's 30 stocks. We care about the S&P 500. We care about the Russell Index, which is, the small business in America, the Russell 5000, the Russell 2000, the Russell 1000. So these are the indexes we care about. We care about the broad, widespread indexes. You'll hear on the 6 o'clock news with Brian Williams or whoever that 17,000 on the Dow, record high, everything's fine, economy's going forward, recovery's on target, all that stuff you're going to hear. In reality, we're going to start looking for some topping signals in the market and some distribution that we've already been seeing. And distribution means that as the market goes higher or as stocks go higher, the institutions are selling as they're upgrading stocks and the little guy is buying stocks. And that's basically how it works since the beginning of time. And we're going to start looking for more profound topping signals. I don't expect to see any really next week, but I think we will start to see them as we move to the middle of the month into the third week of the month, and that's when we're going to start looking for indications that this market is ready to make a turn. And we'll have more on that as we get closer, but nevertheless, that's what we're looking for. So basically, light volume day, float higher, market still in bullish mode, stocks floating up, our MasterCard trade is doing fine, our TBT trade is doing fine. In fact, let's take a look real quick at the TLT, which is the opposite of TBT, and you'll see from the other day, earlier in the week, we were all the way up here at almost 114, and we finished the week at a low was 110.34. We closed at 110.83. That's a pretty good sell-off in the TLT this week. And if we look at the mirror image, the TBT, you'll see this is where we were earlier in the week, and this is where we finished the week. And we actually closed right at this high. Now, one more day up, and we're going to definitely go to this level here, basically 65, and may look to take some of the profits off the table there. We'll see. We'll see how it plays out. We may get a sideways movement from this point for the next week or so, and that would also indicate higher prices ahead. So we'll see how the pattern plays out. But like I said, now we're back in the money. And like I said before, throughout the year, even into next year, a lot higher prices for TBT, but it's still going to chop around for a while. And if you remember, I've been showing you the longer-term chart. Let's take a look at it here. The monthly chart, while this is a new equity, it didn't come out till 2008, and we'll look at the interest rates in a second. But look, this is still at the lows, and believe it or not, this is a higher low. It looks like a double bottom, but it's a higher low, and a higher low portends higher prices. So, if we look at this was 300, this is 56, 55. I mean, for us to get back to here, over here, which is about a third of the retracement, is not out of the question. Let's look at the 10-year interest rate, and you'll see what I'm talking about. This is the monthly chart of the 10-year interest rate. Bullish consolidation. This is going to shoot higher at some point. May chop around for a few more months, but it's certainly going to shoot higher at some point. Today, gold pulled back a little bit, and that's the monthly chart. And by the way, here we go again. Now, this is a low, a pierce of the low, a higher low. So I think there's higher prices for gold, but we're not ready yet. But let's take a look at the daily chart, and you'll see that we stayed inside this big green red bar Excuse me. Now, if Monday or Tuesday, if we come down and go below this, we still have this one to contend with, and I think this will lend a lot of support here. Look at this. You have the 50 period, the 200 period, and the 20 period moving averages all kind of converged, all in this 124, 125 area. That's going to be a lot of support. So if we can chop around here for another couple of weeks, we're going to set ourselves up for a really, really nice, juicy trade in gold and the gold miners. And I talked about the gold miners last night. They were actually flat today with gold down slightly. But you know what I'm saying with the gold miners. If we take a look at the weekly chart, this is, in my book, this is an inverse head and shoulders. You have a shoulder, that's a left shoulder, a head, and a right shoulder. And if we break that trend line, I'll draw the trend line in for you, but I don't want to take the time drawing the rest of it in like I did last night. Right here, if we break this trend line, it's a little rough, folks, so excuse, I'm not right on the points, but if we break this trend line up, $38. $38 right to this resistance point here in a minute. Well, not really a minute, but it'll get there relatively quick. It'll be a lot of momentum. There'll be a lot about it in the news. Gold will be going higher. They'll be talking about the gold miners are going to double and triple from here and all that stuff. In reality, we don't know about that. All we know is we're going to take it a ride to up to 38, and then we'll assess the situation from there, and we'll let everybody else get on the bandwagon around 38, and we'll get off the truck. So anyway, that's gold miners. It's long holiday weekend. Not much happened this week. We floated up like I indicated we would. Maybe I'll make a couple of videos over the weekend as I'm scanning some charts and see what looks good to me into next week. We didn't have another swing trade this week. I was hoping we would, but really it was erring on the side of caution. We'll have some next week, but going into the long holiday weekend, I just didn't need the extra exposure. The members don't need the extra exposure. Another couple of days aren't going to matter, and in reality, there's always another trade around the corner. There's plenty of stuff on my radar screen, so we'll take that as it comes next week. And this is David Frost, Common Sense Technical Analysis. Thanks for tuning in, folks. Have a great Independence Day. Happy 4th of July.